there's not many companies on the stock exchange that can say in the whole time that they were listed, the dividend only went down once 1 year. And for us, that was in 1975. Other than that, it's been steady or grown, but never ever reduced since 1975. So I don't think many people can claim that.
Brickworks is one of the world's largest and most diverse building manufacturers. Today, we'll be diving into the story of ASX BKW. They comprise a diversified portfolio of high-quality assets across building products, investments, as well as the property space. And they've recently just released their FY22 results. They've got a record statutory net profit after tax of over $850 million, a quite remarkable plus 257% up year on year. And this, of course, is despite the difficult macro backdrop that we're all experiencing. We're here to discuss these results and the current state of the macroeconomic environment with the CEO and MD, Lindsay Partridge. Lindsay, welcome back to the channel. It's great to have you here.
Thank you for having me.
It's an absolute pleasure. Before we discuss, obviously, the results and everything playing out, for those who might not be familiar with the Brickworks story, did you want to speak about who you are and really what are the 4 pillars that comprise the Brickworks offering?
Yeah, well, look, Brickworks has been around a long time. It listed on the Australian Stock Exchange when it opened in 1961. So been around a long time. Obviously, our heritage is brickmaking. We've moved into some other things, but we're still involved in brickmaking, and we're the largest brickmaker in Australia. We're the second largest by turnover in the United States now. But we had a couple of things happen along the way. One, we were worried about takeover in the late 60s, and so it was legal in those days, but we swapped 1 million shares with Washington H. sold Pattinson, and then bought up each other's stock until it stopped in about 1990. But at that point in time, we sort of ended up sort of 49-43%. It's wound back a bit since then, but that investment, which cost us $26 million, is now worth $2.5 billion. So it's been a very good investment. And in the early noughties, we sort of realized that we had a lot of land, and it was coming to the point where, we had freeways put through it, and it was looking like it was going to get developed and what we could do. And so we started releasing some housing land, and that there was no future position, so we sold it. But we realized that with the industrial land, there was a future position. So we did a bit of a survey, if you like, and we decided to run with Goodman. It was a brilliant decision. And we set up Industrial Property Trust. We say a property trust, but in reality, there's about 20 of them because it's evolved. And we started building sheds, for specific sheds for companies that wanted, that sort of product. Most of them are large organizations like DHL, Coles, Woolworths, etc. And that sort of evolved. And now, of course, that trust is sort of worth sort of $4 billion. And our share of it is, as we saw in this last period, $1.75 billion. So it's been a great investment, a great story. And it's really underpinned the growth of the company.
For sure. And you yourself personally, 20 plus years at the helm now. I know at the recent FY22 results, you remarked that you would never have anticipated $1 billion plus in revenue, $1 billion plus in underlying EBITDA. I'd love to just ask you, what have been some of those trends that you've seen emerge over that period and really the evolution of Brickworks as you've led it through?
Well, look, I think the main thing is that, I realize that it's not all about trading profit and getting the wealth for your shareholders as a multiple of your trading profit, because that can be very volatile. We've tried to build wealth by asset backing, and that's been one of the fundamental differences of our company and other companies. And the brick business is the only business that I know in the world that in most cases you could shut the brick business down and then sell the assets for more than it's worth or more than it cost you. That's pretty unusual. If I find another one, I'll have to get involved in that as well. And that's because the large land holdings and the property we have, and often they're near the cities, and the cities grow, and then you get embedded in the city, and then you go buy some more land further out and do the process over again. And this has been happening now for us. It's the 4th iteration of it going on now when we're buying land out of Bringelly. But so that's the value creation for shareholders, and it's often forgotten. So our share price is backed by hard assets, not on a trading multiple, which can be volatile in difficult times like we're going through at the present.
Talking about some of those difficult times, everybody's familiar with the inflation story that we've seen now. Brickworks has been able to navigate it remarkably well. You've got those longer term energy contracts as well. They'll roll over to 2024. Also the ability to raise prices. You did it once and then a second time during this period. Did you want to talk about why you've been able to be so well positioned and what you think the future looks like as well, despite this environment?
Well, when you're in manufacturing for a long time, you always got somebody who's trying to take your profit. Now, unfortunately, most times that's the government for one reason or another. But You know, we're always concerned about the energy supply, so we always try to get long-term contracts where we can. And this just happened to work out very well for us this time. I mean, I'm not saying there won't be problems in the future. There may well be if this goes on too long, but we saw that coming. But we actually saw the inflation coming. I mean, you could see the inflation was coming because we could see the trades in the field, how much they're increasing their prices. We thought, well, if we get behind this, you know, behind the curve, we will never catch up. We've got to be in front, otherwise our margins will get smashed. And so we, the middle of last year, we put in very, very heavy duty price rises, like which at the time, which we thought were heavy duty, like 10%. And now, luckily we did. Now, other companies haven't done that, and of course they've got behind the curve and watched their margins being absolutely totaled. And now, because it's the end of the cycle, you could go in and try and get a 10% increase from the builders today. They're not going to welcome you because, you know, they've had such huge increases and they're underwater themselves. So it was just, the timing was right. We got it right, and we're able to deliver the goods.
And Brickworks really is playing right at the intersection of so many different components of the macroeconomic picture, whether it's shipping, trucks, the pallets. You're getting really exposure to a lot of them. Can you talk about some of those trends that you've seen playing out in the inflation cycle? Are you seeing it slowing down, accelerating in some components? How's it really evolving?
Yeah, well, one of the first things we saw was the cost of bulk shipping. You know, 25,000 ton ships had been about 9,000 a day, and they went to 40,000 a day during the pandemic. So you could see that was going to feed through a lot of things in Australia. And of course, we had those shortages that were going on. So I think it's come back. Now the bulk shipping is about $18,000. We've seen road freight's been expensive in Australia and the United States. Why there's a shortage of pallets, I've got no idea, but they've doubled in price. We're worried about a lot of things that are coming out of Europe, and I'm worried that there'll be another wave of shortages caused by the gas shortage, because a lot of things have heat somewhere in their process to manufacture whatever it is. So that's a concern, that we have another wave of shortages. And for us, particularly glazes and stains and oxides all come out of Europe, and the same in America. So that is a concern. We're still getting supply at the moment. We're okay, but it's a concern that could be another area. But likely wages in most cases, haven't taken off, unless there's a shortage and you've got to go outside to get some people. Like we went to an electrician the other day in Perth, and they were $90 an hour. I mean, it's used $90 an hour. But so it's still strong, but I think we're going to see it start moderating as the housing market slows down. We'll see a lot of those trade rates moderate. I'm hoping, you know, we'll get enough trucks on the road that we can overcome that and get enough people to fill the vacancies. Our own position at one point, we had up to 70 away a day. So 70 people, 70 vacancies, plus we have 60 away a day. That's enormous. Now we're down to about 20 vacancies and a handful away a day. So if that's been replicated across the country, that should mean that people can actually get their production up and get the trucks rolling and make all those things happen. So that should help pull that inflation number back.
And really, despite those challenges, you put up those fantastic numbers for FY22. We've talked about some of those, $1 billion plus on both revenue and the underlying EBITDA, record net profit after tax as well. Did you want to talk about some of those key numbers and what you think investors should focus on out of those set of results?
Well, clearly, you know, we're becoming a property company. The growth of the property just completely outpaced what we can do in building products. You know, staggering growth, really. It took us, you know, 14 years or something to get the 900 million, and then the following year at 1.75 billion. So it was a huge lift, and you know, that's the area to look at, because that's going to keep going like that, and maybe not to the same extent, but it will be going like that heading forward. Our investments did really well. You know, Pattinson's has just been a brilliant investment over the long term. I think they've averaged something like 13 or 14% over 20 years. It's an incredible result. The building products, I think, you know, with interest rates going up, you would have to think that it was going to moderate to some extent, maybe not as much as what people think, because A, in Australia, the length of the pipeline, and B, in the United States, because 2/3 of our work is commercial work, like universities, schools, hospitals, fast food chains, these sorts of things. And it usually has longer legs. So I think they're the main areas to sort of focus on.
For sure. And just talking about North America as well, we've talked a little bit about the regional differences in terms of the current macro state. How did you take out the North American Building Products division? And is there also the consideration, or what are you thinking about for the expansion of the JV there on the property side?
Well, yes, we have got one site we've identified that we can get with Goodman having a look at. It'll take us, I think, during the course of the year, we'll get an answer on that, whether it's viable. It is already zoned industrial, so it's a good start. It's just the height zoning would have changed. I think there's lots of opportunity in the building products too, as we're talking to a handful of other companies that sort of approached us, interested in being acquired. So there is opportunity to grow, but we're really just taking a breather there for the year because we've got a lot of capital and maintenance work we couldn't do while the pandemic was on, and so we're trying to catch up on that first. Let's make work what we've got before we go, try and expand the empire over there anymore.
For sure. And then another key term that I think many investors at the moment are always thinking about is that sustainability lens. Obviously, Brickworks is really feeding into that as well. Can you talk about your strategic rationale of what you're thinking about with sustainability and kind of that pathway moving forward as really the rest of the world tries to ramp up that focus too?
Well, I guess it was one of the reasons I got into making bricks as a young man. I thought bricks were just the most sustainable product that was out there. And, we guaranteed them 100 years, they'll obviously last longer than that. And then at the end of the life, you can recycle or reuse them. So I don't know of any product. I ask people, what they think is more sustainable than a clay brick, and I don't get any answers. But, we're doing a lot. People have been worried about embodied energy, and we're always looking at upgrading our kilns, looking at other fuel supplies. Bioenergy is an area we're doing some work on at the moment. We've already got a couple of plants running on landfill gas and another running on sawdust. So we've got a lot happening there. We've already reduced our emissions like 43% in the last 15 years. So we've already met the government's 2030 target. But hopefully by then we'll be even further along the road.
And of course, as we've talked about, there's still kind of some uncertainties playing out in the macroeconomic environment. But as you're looking ahead 12 months from now, what do you think are those key catalysts up ahead for Brickworks? And what are those things that you're unsure about and that potentially is keeping you up at night too?
Well, I mean, the thing that we're all unsure about is, what's happening with the Ukraine war and where that goes. It's a huge concern. None of us want to see that expand. We'd like to see it come to an end. The energy situation, well, some people might have thought it might have got better in Europe when the war was over, but now with those pipelines being sabotaged, that's not happening. So energy is going to be a big problem for Europe for a number of years until they can get on top of it. That's not going to be a quick fix anymore. And so that's the other one. What are the supply shocks which we're not aware of that will come our way? I think that's got to be a concern for really any business in Australia these days.
And then what are those key catalysts for the pathway up ahead over the next 12 months that you think are most important to follow?
Oh, well, I mean, I think the thing is we're going to, or the other thing, we don't know what's going to happen with interest rates. I mean, there's a catalyst. I mean, that could be, great for lifting economic activity, but, that has really got to its limit. When you run out of people, you can't grow anymore. So we've just got to hold back and try and get our productivity up. And I mean, we're amazingly efficient, but I think there's always more we can do. And that's what we're looking at because we haven't got the people. We have to find ways to produce our products with the people we've got.
FY22 was obviously a great year for Brickworks. Did you have any final reflections there, perhaps for the longer term shareholders who have been following the Brickworks story, or maybe those who might be considering the ASX BKW story from here now?
Yeah, well, it's interesting to watch over the last 10 years because if you went back 10 years ago, we really only had about 8 or 10,000 shareholders. And today we've got 25,000 shareholders. So a lot of people, a lot of mums and dads and their super funds have backed Brickworks, and we've given them a dividend every year. And most of the years it's gone up. So there's not many companies on the stock exchange that can say in the whole time that they were listed, the dividend only went down one year. And for us, that was in 1975. Other than that, it's been steady or grown, but never ever reduced since 1975. So I don't think many people can claim that.
40 plus years of dividend steady or growing is a phenomenal story. That's the Brickworks story. It's ASX BKW. If you've enjoyed this video, feel free to share it out. Make sure you've liked, subscribed as well. Lindsay Partridge, it's always a pleasure catching up and look forward to speaking again soon.
Thank you very much. A pleasure.